Perfect. So coming back here, once again, thank you all for joining. I see there's a few more people coming in, but we'll just get it started here, at least with the intro, and we'll get our subject matter going for today. So I'm Daniel Angel Mejia, managing partner of Apex Development Group. We're an investment firm located in Atlanta, Georgia. We're mainly focused on the residents in the residential space, and one of our main points is helping investors and people in general to find alternative investment opportunities within the real estate world, and giving them options in that regard. Um, we're going to cover a couple of things today. One, as the name of today's webinar mentions, basically considering that Social Security won't really cut it for most of the people, given how tough it is to get a proper payment once we reach retirement. It's always a good opportunity to find different alternatives and different ways to find retirement or freedom, um, financial freedom at some point in life. That's why we're here for, or that's one of the main reasons why we are in business, trying to find different options for people that, whether they already have their job, their day-to-day activities, and they want to find a reliable partner to uh, finding uh, options to invest in and secure some returns in the way of doing so. So, what we'll see today, what we'll cover today mainly, we'll talk a little bit about Georgia, the Georgia real estate market, in a little bit more detail of what we are doing and what we're feeling of today's market. Do a little bit of an introduction of one of our programs, which is the joint venture approach. We'll talk about that in more details, what the concept is, how it works, and then we'll discuss a little bit about our Infinity Fund, which is a fixed return fund. Again, one of our main points is giving or offering different options and alternatives for investors, depending on their intention, their time frame, their risk tolerance, as well as their expectations in terms of return. Just finding different avenues to the real estate world in this case. So let's get going. Within the fund, we'll talk about strategies and then a little bit about our competitive advantage and track record and whatnot. We'll open it up to questions towards the end. Although, if there's any questions as we go, feel free to use the Q&A box that's going to be located in most cases to the bottom of your screen. There's a Q&A box. It's activated for you guys to um, ask any questions you have, and we'll be happy to answer them as we go or open it up to questions towards the end. Again, I'm the head of finance management to Apex Development Group, as well as investor relations, and usually I'm going to be the one in charge of having that conversation with you guys or with anyone that's interested in being part of our platform. Basically, we've been doing this since in the United States since 2016, and my background comes more like from the corporate banking industry and the finance industry per se. Um, Happy to be here with you guys today, and let's get it started. Talking a little bit about the market, and before we get into the Georgia market itself, let's discuss a little bit about the capital markets in general, the real estate market per se. The way we see it, at least in the past few months, is the market found some of balance. We did too. There's a few pointers that we like to share with you guys and to put out there in terms of inflation cooled from that peak of 6.6% we had in 2022. Today, we're getting towards that 3%. I know the target is closer to that 2% that we've historically tried to keep as a country, but it's definitely getting there. The smoother or slow trajectory from that peak towards that 3% obviously took a little bit longer, but these are good signs in terms of what's ahead of us, especially moving forward 2026 and ahead. About mortgages, definitely not necessarily in those super low ranges that we saw in 2021 and 2022, but definitely getting closer to that 6%, 5.5%, where the market usually starts flowing in a better way. As far as the housing supply recovery, inventory is up. Definitely, it had dried up way too much in that 2021, 2022 timeframe. Inventory is in a lot more healthy levels, which allows for that offer and demand dynamic work in a better way. As far as demographics, expanding population growth, and now we're getting more like into the Atlanta specific metrics. We're gaining north of 60,000 people every year, which allows that population growth, income growth, job creation growth be sustained in time. And that's one of the main fundamentals or main drivers for our decisions in the investment world. And then the rental market definitely has rebalanced. Demand is still pretty solid, especially in our market, given there's a positive growth in population. Rent growth is steady and definitely not seeing those rent growths that we saw in between right after COVID, but it's stabilizing and started to offer better yields than what we had in that 2023 and 2024 range. Moving on and getting a little bit more specific within Georgia, there's just a few general metrics here that we follow, and it's basically the main reasons why we stay focused in our market. Other than the operational portion, which I'll discuss later on, but it's the 10th largest metro in the U.S. North of 6 million residents already in the Atlanta regional area. A solid median household income, which keeps growing as we go, and 6 median household income according to the latest census. Then within the top 10 cities with the most Fortune 500 headquarters, which that relates directly to that job creation and job opportunities, which definitely is one of the main drivers also that we keep track of in terms of investing. As far as it has definitely been noted as an economic powerhouse based on the companies that we have here, pro-business environment, which is always good for those companies coming in. A lot of talent and innovation with a lot of more and more schools setting ground in our area. And as far as demographics and housing trends, again, for the state, we have more than 100,000 residents in 2023, and it has been similar in the years after and as we go. And then our net migration, which is always a good metric to follow, keeps staying around those 50,000 people every year. Net migration meaning how many new people we get in, minus the people that leave either the state or the city. That's basically the net that we're looking for. Moving on, as I mentioned, we're going to talk about our joint venture passive investing program. This is a great way for those that are interested in shorter cycle projects, those people that don't necessarily like to stay either within funds or long-term projects. These specifically would be single-family homes built for sale. And the way we pretty much set it up is for that investor who's interested in being part of it, we will manage the project and they will be the investor within the project. These are usually 12 to 18-month life cycle projects located in Atlanta, in growth markets that we track continuously. And it's just a perfect way to have a specific directed investment in somewhere you know where it is, you know what the project is, and a shorter life cycle. So key points for this type of investment and this type of program that we manage is it's designed for investors seeking clarity, control, and professional execution. We are in charge of the project, and our investors are in charge of sourcing the equity for the project, and we handle the rest. It's a simple way to participate in tangible short-term real estate projects and build. They're built and managed by Apex. We have our own construction company. We're vertically integrated in that regard. We'll talk about that a little bit later. Then each project follows a defined 12 to 18 months life cycle, as I mentioned, from land acquisition to sale of the home. Excuse me for the light going off there. And then it's a passive in the way that the operation is in our hands, but it's transparent in terms of communication. We have constant reporting, and it's easy to track because it's one specific project, one specific home that you know it's going to be built and sold. Little bit of the core pillars about this type of program. One, basically, it's a partnership in action with our team. We invest alongside our partners. We build every project with transparency, discipline, ownership, because it's pretty much our project also. We're integrated for performance, so our in-house teams, which include all the way from acquisition, underwriting, and then through the construction process, which includes scheduling, quality control, cost management, and whatnot. We try to keep the middlemen as minimal and controlled as possible, making sure that we're as consistent and precise as possible also. With these projects, basically, as we're doing scatter site meaning we buy one lot separate from the other. We're not doing like huge communities, but we're just helping improve neighborhoods. We're basically expanding housing, offering or helping narrow that gap of housing supply, keeping it as affordable as possible, but yet making it as appealing in terms of investment as possible too. We support local communities and local economies. We hire local and try to make it as impactful as possible too. And then, as mentioned before, we're transparent every step of the way. We have an investment relationship team that will be in contact with each of us, is always in contact with each of our investors, just making sure any questions are solved at the proper time and with quality answers, and making sure that we're making progress as it should be. Here, it's just a quick example of how a sample deal works. So, as mentioned, it's usually one single project. The example we're taking here, let's say it's a 2,500 square feet home. We're assuming a $675,000 sales price, where our holding period is a 15-month period usually. The cost for sale that we're assuming is a 4.5% in commissions or whatnot, closing costs, etc. We're assuming interest rates and a certain leverage point for the loan assumptions, and then for a project like this, total costs between the purchase price of the lot and all the construction itself would be somewhere along the lines of $588,000, which equates to roughly an 18% rate of return for our investor, internal rate of return. So, as you can see, in a relative short period of time, there's a good opportunity and possibility to making an interesting return. Obviously, this is just a hypothetical example, hypothetical project. Whenever we have a specific opportunity and a specific deal, happy to have those conversations, share the details of each one individually, and then making decisions as we go. I'll pause there for a second since we have a quick question here. So the question is, what the 12 to 18 month JV project lifecycle actually looks like in practice. So basically, very similar to what we're seeing here in the sample deal. The 12 to 18 month is just a usual range based on performance that we've had in past projects. In each case individually, we will have a specific holding period that we're targeting. And basically, the life cycle, meaning there's some time for the acquisition of the land and then some time to adjust designs, get the permitting process taken care of, and then starting the construction all the way through once the construction is finished, putting the house under contract and selling the house. Basically, that's what the 12 to 18 month usually takes into account. And we're targeting these kind of returns for those projects. Whoever joins and are current investors in each project will know which house they're invested in, will have specific reporting and specific conversations throughout the time of the construction and the development of the project itself. It's very important also to keep in mind that these are all projections, these are all targeted returns. Sometimes we have better projects once they're executed. The beauty of this kind of exercise is if we have a better result, that result goes straight to the JV partner. In case it's different, then we always look for options to make it work. But obviously there is the same risk associated to any other real estate investment, as probably you guys already know. Again, feel free to ask any questions regarding that the JV program. We're happy to answer those as we go. In the meantime, we'll step into this other option, this other alternative that we've also discussed in the past. Probably some of you guys are already familiar with it, but it has to do with what is our Apex Infinity Fund. I'll make a pause here just to differentiate between these two, and we can further discuss towards the end also. But basically, it will all depend on the expectations that each investor has. At the end of the day, and ultimately, there's no like a one size fits all in terms of investments. It usually has to do with age, risk tolerance. If this particular investment has to do more with generating cash for X or Y reason, or if it's more a wealth creation kind of long-term projection for your investment portfolio. So happy to have those conversations individually as always, but basically what you will see with an Apex Infinity Fund would be more like for that type of investor that's looking for something a little bit more secure, less risky, and having something with more certainty. And for somebody that's not really concerned about knowing exactly where or in which property or in which project their funds are invested, but rather open to being part of a commingled larger fund. So the business plan for Apex Infinity Fund basically is investing in, again, residential space, and this includes homes for sale, homes for rent, as well as multifamily projects. The fund is created to deliver fixed compounding returns through a diversified portfolio. And then again, all within the Atlanta metro area. This leverages our or Apex's in-house teams, and then the fund focuses on stable income, disciplined execution, and capital preservation. So in this case, as we will see here in this slide towards the bottom right, we have different classes according to the level of investment within the fund. So the good thing in this case is you can start with as low as $25,000. And then depending on how much is invested, goes the return. So it starts at 7%, it goes all the way to 10%. These returns are fixed. And there's two ways in terms of determining your distribution options. You can choose the total growth, which is constant compounding or reinvesting of the returns until you decide to pull the funds out, or half of the return being reinvested and half of it turning into income or actual cash distributions. So this fund offers a lot more flexibility and it caters to different investment goals. The lockup period in this case is only 18 months. So once you invest, wait for 18 months, you can decide to pull your funds out if that's your desire, or you can stay as long as you want. After the first $25,000, you can add in $5,000 increments, so it's a lot more flexible to get in and get out. The difference is you're getting a fixed return. If projects go better, it doesn't matter. If projects don't go as good, you already know what your return is going to be. This allows investors to choose the approach that best aligns their financial objective at the end of the day. I'll answer one of the questions right here. So it says, what makes diversified exposure through the fund different from choosing individual JV projects? So that's a very good question, actually. This can go both ways, and it depends again on the risk tolerance. The diversification of the fund comes specifically because the equity raised within this fund is deployed in multiple projects and different asset classes. So yes, we are within the residential space always, but some of your funds will probably end up going to a multifamily project. Some of them will go to a investment in a build to sell home, another one going to rent. So that's where the diversification comes from, and that's why we are able to offer a fixed return. In the JV approach, you're choosing your investment, and obviously there's a targeted higher return because it's a higher risk, but there's no diversification in that case because all the funds are going within the same project. It's a little bit of a trade-off there, but it depends again on what the expectations in terms of investments are. Hope that answered the question there. Just to be a little bit more specific about the fund strategies in this case. So again, we do build to sell or like home building for geared and targeted to the retail market or retail homeowners. The multifamily space, we tend to acquire existing projects and then basically the approach in the multifamily space is doing some renovation, some improvement of the properties to increase that cash flow and allow for that portion of cash flow to be there available. And the build to rent space basically is just building new properties specifically for rent. A little bit about our track record. So we have it split in two sections, what our current portfolio is and our sold assets. In the current portfolio, we have somewhere along the lines of $60 million, which is comprised of most of it being multifamily, about 70% of our portfolio, and then around 30% of it being single family. This equates to roughly 340 units in our portfolio. And then our past projects or sold assets are mainly within the single family space, 85% of them, and then 15% of them being multifamily. In total, we've been, I guess, like our assets under management add up to roughly $80 million, a little bit more than 500 units. And then obviously our current pipeline still going on the single family new construction projects. Cool. Moving on to our competitive advantage, what we like to highlight in this section basically it's one of it being the fact that we have part of our team in Colombia, which allows us to have a dedicated back office team enhancing operational control and efficiency. Both my business partner and myself are originally from Colombia, and that helps us have a solid professional bilingual team helping us push these projects through. As far as the finance management team and the rest of the key features here has to do with our vertical integration, which I also mentioned a few minutes ago. meaning we don't have people or having to hire third-party folks for the different capacities. We have our own finance management team, our own investment team, which is comprised by uh, an acquisitions team as well as an asset management team. The acquisitions team is basically that team that's always out there looking at these specific markets and sub-markets within our metro area, just making sure which are those better opportunities out there. And then about the project management team, I think this is one of our key advantages, and it has to do with the fact that we have our construction and renovation team in-house. We're general contractors. We have that every step of the way and every process down to the T, just making sure that we can be as efficient and effective as possible. Quick question that we received here has to do with why should I prefer the JV model versus the Infinity Fund? It's actually a great question, and it ends up being a very personal decision. I wouldn't necessarily say that one is better than the other because it all depends on the specific case. So if somebody is looking for a higher yield and is okay with not being as diversified, they believe in that specific market or sub market, they know the area, or they are looking for a higher return. Definitely, the JV approach is a lot easier. I mean, is a good opportunity, a good option, just because it's a shorter time frame and there's higher yields targeted for those. The Infinity Fund would be more for folks that are looking for more of a very passive, very secure option. So think of if within your portfolio you have either some of your funds are in CDs or money markets or things of that nature that are fixed return driven, then the Apex Infinity Fund offers a higher return than those, but still you are within a real estate investment alternative without having to get all the risk associated to specific projects. So it's a little bit of balance, and again, comes down to what the expectations and what each individual is looking for. Happy to have those conversations again offline and help you make decisions as we go. Okay, we've gotten pretty much towards the end of our space here. We just wanted to make sure we could put these options out there for you guys to consider. Once again, we're always open to answering any questions or having any specific conversations. We always have constant projects coming in within our JV option, and then obviously within the fund, always happy to have that conversation also. I'll take a couple more questions here. One is, with the market stabilizing, what risks should investors still be aware of? I think there's always risks associated to the real estate market. I think one of the main things right now, especially in the single family space, has to do with mortgages. And I'm talking about that product like for sale within the retail market or the home building market. We peaked at somewhere along the lines of 7.5% mortgage rates. We're getting closer to the low six, high fives right now, and it's definitely getting to the market itself getting to a place where things should start getting more traction. I think it's more a matter of keeping track of those macroeconomic metrics, but again, the fundamentals are there. We're in a city that has been showing growth consistently and constantly, and offering really good options for those that are coming into the market. So definitely, we're still in that later side of the transition phase. Risk will always be there, but again, like our expertise and the focus that we apply to each one of the projects is always in an effort of mitigating those as we go. The other question here is, how soon could someone participate in an upcoming project? So that's a great question. If it's within the fund, we can do anytime. That's as fast as, going over the documents and pretty much signing up. Happy to take those conversations as immediate as anyone would want to. As far as the JV program projects, they usually come as we go. We will, on average, have between 2 or 3 opportunities of those on a monthly basis. They come and go pretty quickly, and we keep that pipeline running. So it'll be obviously depending on availability of projects, but there's usually some in inventory for us to take a look. So also similar to the fund, not so immediate, but usually within a few weeks of time could be opportunities open if there's the interest for that. What is the onboarding process for either the JV program and the Infinity Fund? Sorry again for the light here. So for both, the JV program, it's pretty much going over the documents, having a in-depth discussion and conversation about the specific project, getting on board, signing documents, and funding as we go, depending on each project. That's more on a case-by-case scenario, depending on how the cash required would be for that specific project. As far as the fund, it's very similar. It's more of a standard package that's already been ready to execute. So it usually takes between 1 and 2 weeks between the time of understanding any questions, if there's any, and then funding itself. The great thing about the fund, though, is 30 days after your investment has been funded, your investment starts to accrue regardless, with that fixed return that we discussed earlier. And then another question here is there a minimum investment required for either option? So for the fund, yes, there is a $25,000 minimum investment. For the JV approach, there's a minimum of $50,000. So it's a little bit lower for the for the fund. As I mentioned, a little bit more flexible for those that want to get their feet wet. For the other one is $50,000. Although we prefer to have investors taking the whole project, that's a lot easier, and usually is what happens. These projects run anywhere between $100,000 and $150,000 per project, but obviously there's we keep our word with the minimum, and we'll just, if that's the case, we'll put a few investors within a single project. Feel free to ask any other questions if there's any. I'll take a couple more minutes here in case there are. And then here is our contact information. This is my phone number. Anytime, happy to answer any questions. You can take also email. There's our website. Happy to be a resource for you guys, even if this is not the time. If there's any just general questions that we can answer. We see ourselves or we would like to see ourselves, and hopefully our investors and potential investors see us like that as another resource to be here, answer any questions you guys have, either about our projects or any other projects that you're looking at. Happy to compare if there's any openness to do so there. But again, happy to be a resource always. You see, we don't have any more questions today. I think we'll give it a wrap for today's call. Thanks again for taking the time to be here. Happy to be there for you guys. Feel free to reach out anytime, and see you on the next one. Thanks so much. Bye-bye.